the key theme to keep in mind is that the first couple weeks of December are always very, very important, where people actually lay out their views for the entire year, following year, that's 2021. As we hit the last 2 weeks of the year, things start getting a little bit wobbly, and then the news start to prevail and have an impact on market dynamics. And this is exactly what we're seeing now, with mobility now taking the headlines, the story out of the UK really being very important, and even the budget passing in the US clearly not having an impact on markets.
Yeah, and I think the key is going to be sort of just how dangerous and also susceptible to the vaccines this new strain might be. I actually reached out to a virologist, friend of mine, contact of mine. He said it doesn't look any more dangerous, just more transmissible, and the vaccines are likely to work. Again, one PhD's opinion, we're going to have to wait and see. But if this new lockdown, Daniel, extends to more parts of Europe, well, first off, tell us if you think it will. But if it does, what might that mean for equity markets as we round out the year?
Correct. So one of the things to keep in mind, so first of all, it's very likely it will. And the reason is because, again, you don't want that specific strain to come into your country. You don't have the vaccines yet. The risk is that, again, because it's 70%, as you mentioned before in the program, that rate is very high, and you really are worried about overcapacity in your health system. So obviously, you would rather be overcautious here, and stop every type of mobility. Now, keeping that in mind, Europe has been a fairly popular trade in the first couple of weeks of the year. And this is exactly what I mentioned before, in the sense that you did have investors buying into a long euro and a long Europe, particularly the UK. So we've seen actually a very strong desire of investors to buy UK equities, gilts, heading into the weekend. And as a result, with the news coming across, people tend to unwind those positions. So a lot of it is positioning towards year end rather than having a strong long-term view.
Well, do you think this is going to derail the globals, not just the U.S., Daniel, the global rally in equities that we have seen? Will this new strain, these new lockdowns, will that derail that?
Well, I think it has the potential for a fairly reasonable adjustment between now and year end because of the positioning that we saw over the past couple of weeks. So I do agree that there is reason for more meaningful volatility in markets over the next couple of weeks. And again, just to give you an example, the pound move over the past few hours, it's at least 1.5 to 2 standard deviation move. So it was a very significant move. We are prone to see higher and larger standard deviations behavior around those couple weeks because of positioning and because of what's happening.
Shepard Smith here. Thanks for watching CNBC on YouTube.